All right, welcome everyone. So we'll get started in about 20 seconds here. There we go, almost set to go. Perfect. Okay. So welcome everyone. So today we will be talking about, well, how to become a millionaire, basically. And it might be sort of what you expected and sort of what you haven't expected, depending on your point of view, I guess. Let me just load this up over here. There we go. So hello everybody. There we are. So without further ado, let's talk about becoming a millionaire and what it really and truly represents in most people's cases. All right. Well, obviously, everyone would like to know, or most people would like to know, how to become a millionaire. How easy or how difficult is it? What can you do? Are there any special, programs you can purchase or follow, or maybe you should be gambling on a certain slot machine, or maybe some lottery is really the way to go. So unfortunately, in case you hadn't figured it out already, but in the vast majority of cases, those 1, 2, 3-step processes, just buy this one thing and magically you'll become a multimillionaire and super wealthy, those are typically incredibly unlikely to pan out, unfortunately, for the vast majority of people. There's nothing wrong with playing buying a lottery ticket every once in a while, or playing some games of chance if that really entertains you, as long as you understand that you are gambling in those situations. And again, gambling has a place as long as it's entertaining and provides some value. Sure, that there's a place for that in your life. The thing is, most people spend far too much money on things like lotteries, spend way too much money on random things they see online that are essentially almost as risky as a lottery. I'm talking about all those ads that you've seen, about the secrets that they don't want, the proverbial they that proverbial they that they don't want you to know. Maybe that's a massive government, or a massive corporation, or maybe a cabal of rich billionaires that they don't want you to find out the secret to wealth. And you just follow, you just pay this other random person who's, breaking, it's a whistleblower breaking through these obtuse limits that I've set on them, and they're trying to tell everyone how to do things. Well, again, usually the only people that make any money off of that and from that tend to usually be the people selling you the program. It's incredibly unlikely and very rare for any average person to actually benefit substantially from these things. I'm not saying no program will ever make you some money. If you're, any pyramid scheme, if you're high up enough, I guess, in the echelons, you'll eventually make some money and sucker in enough other people to kind of get the money from, right? So the entire concept of becoming wealthy is, all you want to do is basically have more people sending more money to fewer people, and then eventually on the very top, those individuals become more very wealthy. And if that looks like a pyramid to you, it's not a surprise, because again, a lot of these get rich easy overnight schemes tend to usually be pyramid schemes of one form or another, or incredibly risky gambles. So while those might work in a very small proportion of individuals, for the vast majority, there's a much easier, simpler way of becoming a millionaire in terms of, and when I say easier, I mean you're more likely to succeed this way. The problem is, which people don't like, is that it's a lot slower, and it also takes quite a bit more effort, typically, but it actually works. So what is that? Well, again, you probably already know some of what I'm about to tell you, but let's just look at the data, all right? And obviously, there are very high risk investments. You might have heard about this one brand new token or this cryptocurrency or options trading or these things or those other things, depending on which country you're in. Some of those or all of those things might actually be illegal. In many cases, it's not the evil government trying to not allow you to invest in things that could bring you fame and fortune, but it's mostly the government trying to protect you from what's likely to be either a scam or a very, very high risk proposition. So what are the actual options? And as I said, I'm not saying cryptocurrencies never pan out. I'm not saying some semi-legit things out there don't actually exist among the hundreds and thousands of scams or very, very high risk endeavors. It's a matter of finding a needle in a haystack. So you can try and you can take it upon yourself to do that. But from what I've seen and the things that I have tried out of those, fly by night operations, they typically don't pan out, unfortunately. Yet all of this being said, research after research, finding after findings and study after study, poll after poll, shows that in the vast majority of countries, between 80 and 85% of millionaires are self-made. In other words, about 13, 17, 10, 15, depending 20%, depending on which country you're in, but on average, all of millionaires have inherited wealth. The others tend to usually be self-made. So how come that about 4 out of 5 millionaires are self-made, yet I keep on telling you that some of these easy ways of basically becoming wealthy typically do not work? Well, clearly there's other ways that are a lot more likely to succeed in terms of you're much more likely to become a millionaire. So what are some of those? Well, we've all heard that there's this increasing wealth gap, and it's a real thing. So there are a smaller and ever smaller group of individuals that tend to own more and more of institutions, of companies, both big and small, in the world. And as a result, even through economic downturns, they tend to do a lot better than people. And as a matter of fact, right now, a lot of working class individuals have lost a lot more of their net worth, whereas many of the wealthy have actually made a lot of money. What's kind of worthwhile looking at is when you're looking at these groups of individuals, it really helps to look at what are the general types of investments that they have. And if you're doing that, it actually helps to explain a lot about how people that are eventually becoming wealthy, how they succeed in becoming wealthy and becoming ever wealthier as time goes by. So this here, I'm going to just share this link with you in chat in a second. This is from a 2010 study. Here we go. Let me just copy that in chat as long as I get I have too many windows open. There you go. So this is basically a working paper from the Levy Economics Institute. And again, it's from about 10 years ago. So it's somewhat dated, but the findings therein are still as relevant today as they were in 2010. And they were basically looking at the wealth distributions of, the top 1% of individuals, the bottom 80%, and basically the, 19% in between. And looking at what types of assets they have, etc. So you can read the research paper yourself if you're interested. But basically what all of this boils down to is what you can see in the graph on the left here. Now, the way to interpret and understand this graph, right, is you're looking here, the 3 bars, basically this is the top 1% of individuals. This is the next 19% of individuals. So these two combined make the top 20% of earners. Now, to be fair, this study specifically focused on the US population, but it's not that different in Canada as well. You might have 1 or 2 percentage points a bit different there in terms of income level and whatnot, but it's very, very similar. And then on the right-hand side over here, you have the bottom, like the remaining 80% of people. And the way to interpret this data is on the right-hand side, they're looking at the debt to income ratio of individuals based on whether they are in the top 1%, the next 19%, or bottom 80% of the population by household wealth. All right. And those are gross assets, not income, just assets in terms of how much wealth have they accumulated over time or currently own, basically, right? And then on the left-hand side over here, this is the relative percentage that those individuals have invested in each one of those bars, okay? So, for instance, for the top 1% of individuals, they have about you see principal residence in this blue, only about 10% of their principal of the value of their principal the value of the principal residence only makes up about 10% of their wealth. Okay, now they might have other investments and other businesses in real estate. So it doesn't mean that wealthy people only own only 10% of their wealth is made up by real estate, but their principal residence, whether it's a gigantic castle or a tiny condo, it's only really 10. Real estate only represents 10% of their assets. Then how much they might have in their pension, relatively speaking, is whatever. It's like about 7-ish% liquid assets. So that tends to be usually cash on hand or other market money market funds, things that are very easily accessible. That's another 5-ish% or thereabouts. Various forms of investments might represent about 20 to 25%. Miscellaneous assets at the very, very top here. And now the vast majority of their wealth tends to be in business equity. And as I said, for some of those individuals, that business equity, if they're, let's say, they're professionals in the real estate sphere, that might be some form of commercial real estate, various assets and properties in that regard, right? For others, that might represent, a startup that they've had and that has become a multinational company, et cetera, et cetera, et cetera. So one of the surest ways of becoming a millionaire, if you're among the successful few that manage to survive the 3 to 5 first years of a startup, is to literally have your own business and be self-employed, basically. The problem is, obviously, a very large percentage of startups, about 80% of them, fail within the first 3 to 5 years. So it's a very hard market to break into, to basically come up with a startup idea that works out and that you can stick with. But that would be one option. It's not for everyone. But again, that's how you have a lot of these self-made individuals and self-made millionaires, is they had a business idea, whether that's a more efficient way of caring for your lawn or, painting apartments or what have you, or whether it's the, latest, most, fanciest tech startup. A lot of those individuals, I'm not saying every single painter out there or every single software engineer eventually becomes a millionaire, but a lot of times people that do start their own businesses end up hiring other people to work for them. If they're successful, end up being in that situation, in that position where they will eventually become millionaires. But that's not the only way. But that's basically, this is what this tells us. Those 1%, those evil 1%ers, a lot of them tend to be people that own businesses. Right? And yes, sure, some of them might have inherited that, but as I said, that's a small fraction of individuals, not all. Now, the next 19%, right? This is their distribution. As you can see, again, their principal residence at this point makes up about 30% of their net worth, and this is the breakdown. And finally, the bottom 80% of individuals in society by net worth. Their principal residence makes up about 60 to 65% of their net worth. And I would venture to say that in Canada, in many cases, that's even much more so. Those of you that have attended previous live streams, I've mentioned this CIBC poll that found, I think came out in 2015 or 2016. They found that the average Canadian has saved only about $184,000 for their retirement, explaining, that their investments are a tiny, tiny subfraction of their net worth, and most of their money is really stuck in their principal residence. Now, that's great when real estate goes up. Not so great when real estate goes sideways, or even when real estate goes up. A lot of people are very stubborn about selling because then they figure, well, I can't really afford to buy anything else if I sell to access that equity. So that's a problem. And now, in case it wasn't clear, that one of the main reasons why the wealthy get wealthier while everyone else isn't is because most of the wealthy are invested, most of their net worth is either in investments and or business equity. In many cases, that's also an investment, right? And everyone else is just kind of primarily invested in their principal residence. And as much as houses go up in value, the stock market does typically a lot better, and businesses grow a lot faster than real estate does. Keep in mind, on average, real estate grows by about 3.4% per year, up to about 3.7% on average, depending on the subtype of real estate you're looking at. But that's the average yearly growth. And sure, as we've seen in recent months, we've seen some massive, ridiculous, year-over-year appreciation, close to 30% in some areas, 20% in others. Yet condos have been steadily declining in many markets, right? So in many cases, it depends on what the type of real estate that you're in. So real estate is a lot riskier than most people are willing to give it credit for. Yet it can be really effective also in the grand scheme of things, and having and providing some sort of balance to your portfolio. Now, that being said, if you're looking here on the right-hand side, right? What is the debt to income ratio? In other words, how much debt do people have based on what their current income is? So a debt to income ratio of 100 would be literally they owe $1 for every dollar that they earn. Well, it turns out that the wealthy, they have a debt to income ratio of about 40-ish%, or just sub 40, about 36, I guess, around there. The next 19% have one that is about 118%, and most other people have it around 160. Now, this was in 2010. Things have only gotten worse since then. In Canada, as a matter of fact, right now, the bottom 80% are probably around 190 or so. So things seem to be quite dire. So just looking at this graph, you might say, well, there's what's the point? There's nothing I can do unless I start a business. Not really, right? Because as I said, while that might be a way in which a lot of wealthy individuals become wealthy eventually, it's still a high risk proposition, and it's not for everyone. That's one option, but that's definitely not the only option. Turns out that the thing that you can do, that is the best thing that you can really do, is focus on the things that you can control in your life, and look towards your strengths. Different people have different strengths. For some of you, starting a business might be the right thing. For others, that might be probably a really bad idea to begin with. Now, it's worthwhile looking at this other little study over here. So this one is from 2014, and they were looking at, I'm going to put this also in chat. Let me just give me a sec. There we go. This is the link for it. So the important aspect of this one is they're looking at wealth distribution over, and basically how has the overall accumulation of growth and growth in wealth accumulation, how has it changed based on your percentiles of the global income distribution, right? So here they're no longer just looking at the US or Canada, they're literally looking at the entire world, and by how much more growth have people seen in the income levels of the bottom 5%, next 5%, et cetera, of the people of the world. The only reason I'm bringing this up when we're talking about, becoming a millionaire is that even if you're, earning minimum wage in Canada, depending which province you're in, it's around $13 or thereabouts. Some have it a bit higher, some have it a bit lower. In Quebec, for instance, is $13.10 since last May. But even if you're earning minimum wage in Canada, you would still, basically the entire Canadian population, if you're looking from a global point of view, this is basically the poorest person in Canada is still about in the top 67% or so of income earners in the world. So if you're the average Canadian earning the average amount of, around $46,000 or thereabouts, you're probably about in the 80th to 85th global percentile. So you're in the top 15-ish percent of the world population by income, even if you're merely in the mid income level in Canada. So the only reason I'm pointing this out is just to focus specifically on that and realize that although it might seem that it's only the wealthy that have been making more and more money in recent years, which is true based on this, and this is based because of that, right? A lot of investments have gone up exponentially over the last few decades, whereas wages have not kept pace with the increased rate in appreciation that certain types of investments have had, right? So yes, this is true, but globally, it's also people that earn very little that have seen massive increases due to globalization in their standard of living. Obviously, companies could do a lot more. This is a far-reaching issue. Just because they're earning twice as much now, so someone who's earning $2 a day right now living in sub-Saharan Africa might have a much better standard of living right now compared to what they used to have or their parents used to have 20 years ago, but it's still not necessarily as rosy as it could be, right? So companies still have a lot to go. My point is, if you're living in Canada, you're already kind of incredibly lucky to just be here to begin with. And sure, everyone has their problems, but realize that you actually have a lot of things going for you. So try to focus on those little positives and try to see what you can do and how we can make that work for you. And now, if the average Canadian feels like their wages have been stagnating, they're very much right, because the average Canadian would be, again, about in this group over here, and if you're earning the average income in Canada. And as a matter of fact, over the last 20 to 30 years or so, if you were to look at your purchasing power, it has actually relatively been flat or decreased in certain cases. Whereas many other people, either in very low income countries, they've seen it grow over time because of globalization, and the very wealthy have also seen it grow exponentially because, in part, globalization and other economic forces where the companies that they're invested in have been growing exponentially. So all of this to say, in many cases, this perceived inequality when you're living in Canada might be really real, but in a sense of, yes, if you're the average Canadian worker, your wages haven't been really keeping pace with inflation compared to the very wealthy. But to go from here to at least moving in the right direction, all you have to do is just basically imitate what people that are wealthy and that have been accumulating wealth have been doing. And sure, it's a lot easier to make $1 million if you already have $1 million to start out with. However, it's not impossible, and certainly very feasible for the vast majority of people to start taking, making the right decisions and taking their financial planning seriously. So, in many cases, the biggest barrier to getting started is really in your head, like literally in your head. You're creating your own barriers, really. So, what you want to do, well, is thinking about things slightly differently if you haven't done so already. So what can we do? Find something positive in your life to focus on. Because again, if you're depressed, if you're low, if you've tried a ton of things, maybe you've tried to, I don't know, maybe you've tried to start a business, it didn't quite work out, or maybe you've worked really, really hard at the fast food place you're currently working, and it seems like you're still drowning in debt. It's incredibly easy, especially in the peak of a pandemic, to get down and not really feel like doing anything and just feeling like it's not worth it. And then you're like, well, I have $5 left, so might as well just buy a lottery ticket because that's the only thing I can really reasonably do with that $5. There's nothing else I could possibly do with this $5 that would eventually make me wealthier anytime down the line, other than risking it and gambling it all on a lottery ticket, right? But I guarantee you everyone has something positive. Just it might be a bit harder to find But find that something positive in your life. Maybe it's helping a friend. Maybe it's being there for a family member. Maybe it's just doing something nice for a neighbor, right? So try to focus in on the positives. The more open you are about seeing, I would say and I know this sounds super cheesy, but the more open you are to noticing the good that you can do, the easier it'll be to then focus on, again, bettering your own life and not being down all the time. Because if you're down, no matter how many pieces of advice someone would give you, you might say, nah, sure, I'll start doing that tomorrow. Right? What's the point? It's never going to work out for me anyway. Whenever I try something, it doesn't work out, right? So again, try to focus on those small little victories and small little things. And specifically, focus on things you can control. It's incredibly damaging mentally to have a sense of lack of control, right? So what you want to do is focus on the things in your life that you can control. You can control when you go to sleep. You can control when you wake up. That's a basic. Start with that. You can control when you're having breakfast. You can then maybe control also what types of activities you're doing. So try to focus on the things that you can control. All of this stuff is just so you're in the right mental space to then try to actually do something with your finances. Otherwise, as I said, no amount of advice, no amount of, 5-step program, nothing is going to work with you if you're not mentally ready for it, right? So yeah, try to find a few little positive things. No matter how crappy your life is, there's always something positive you can find in it. And try to focus on the silly little things, but that are inside of your control at first, and then more and more on the things you can control going forward. It's incredibly important to understand the difference between saving, investing, and gambling. As I said, there's nothing wrong with gambling if you're aware that you're gambling and your chances of success are incredibly, incredibly low. Long term, especially in a low interest rate environment, you really should be focusing very, very hard on investing your money, making it grow. For some people, that investing, it might be investing in yourself to get another degree or get additional experience. Maybe you can do find some additional information online. That way you can maybe get a promotion or get a different job, what have you. Gambling should be for fun, right? That should not be the way you're going to be paying next month's rent. If you're gambling to pay next month's rent, there's a problem there, right? And saving, although it's important to have savings, it's important to have a high interest savings account that you're using for your 3 to 6 month worth of emergency savings. At the current low rates, if you're primarily just focusing on saving, there's really no point to it. Sure, have savings. It's just that once you have those 3 to 6 months worth of emergency savings, you really want to be investing your money for the long term, 5 years plus minimum, typically. Okay. So set up a long-term plan, but have intermediate steps along the line. Just saying, I want to be a millionaire eventually won't make it so any faster. So this is a really nifty little retirement calculator, and you can use this to figure out roughly how much money you would need to save for how long and invest for how long in order for you to be able to basically be financially independent. It doesn't mean that you have to retire when this thing says you're going to be retiring, but nonetheless. So by default here, the link that I shared with you, set it up to $46,500. Again, that's roughly the average income in Montreal. Other areas of Canada have it slightly higher or slightly lower, and so on and so forth. So this is an example I've used in the past, and this is why I'm using this here. So, aim to try to basically set aside about $5,000 per year. If you're earning the average salary, so that's about 11% or thereabouts. And then obviously long-term rate of return of a balanced diversified portfolio is about 7%, right? And if you're saving, again, roughly 10%, 11% of your income, if you're earning the average, then it would take you about 40-ish years. Again, this is one calculator. I've shown you another one that, show that this can be achieved in about 40 years. So, they're using very similar math here. It's the specifics are a bit different. But again, 1 year plus minus not a huge difference here. And then yes, eventually, if you do that, if you're able to save and invest specifically $5,000 a year, you end up with basically within 40 years or so, you end up with at least $1 million. So it's a very slow path to becoming a millionaire, but that's a path to reaching it. And pretty much everyone should be able to do so. Okay, see, I've assumed here that the average income doesn't change over the next 40 years, right? Obviously, if you're earning less than this, you would have to work harder on saving a bit more. Because, let's say if you're earning only $25,000 per year, right? And then let's say you're only you're saving 10%, right? So that's, at that point in time, it would still take you about, and if you can actually survive on that, on 22,500, it would still take you about 40 years to retire, but you would retire with a lot less than $1 million. You'd only retire with about $500,000, right? So about half that. But even then, if you have a spouse and they also work and both of you are making only $25,000 each, you could still retire between the two of you. You'd still be, retiring with $1 million following this. Now, the key thing is, so let's say you're earning, let's go back to that 45 roughly. There you go. Now, the key there is obviously if you're able to increase your savings rate by a couple percentage points, you can significantly reduce the number of years that will take for you to become a millionaire. So for instance, let's say you're able to save 15% eventually, right? That would save you a whole 6 years towards becoming financially independent, and on you go. So the idea there is the more you're increasing your income, the more you should try to, if not in percentages, but at least in dollar terms, try to save even more. That way you're able to, and again, this is not about retiring early. You can do that if you want to, but this is about being in a place where you have sufficient investments that your passive income generated from those investments in the form of dividends, etc., is more than enough to offset your monthly expenses, right? And as I said, have intermediate goals. Just saying, well, in 40 years from now, I'll have $1 million is not really going to be very motivational for very long, right? So have intermediate goals. And how many years do I want to have, saved up 50,000 or 20,000 or 5,000 or whatever it is, right? To see how you're doing and progressing. Again, for some, in order to achieve this, it might mean getting a different job. So that might be mean investing in yourself first to learn new skills and getting another job, or maybe getting a second income stream, whether it's by, signing up for helping someone on Fiverr, for example, or creating something online or what have you. There are many different sources of potential income you can use these days. Again, track your progress so you know whether you're on track or not and whether you're advancing the way you should be. All right, and just in closing here, what's the legit plan? Because right in the title, I promised you a step-by-step guide, right? So as I said, the very most important thing that you have to do at first is be in the right headspace, right? Sorry, this is just jumping. There you go. So understand that you are in charge of your life. And I know, this is a lot easier said than done in many cases. I've been in situations where basically I've worked my behind off to do something and things just don't seem to work out for whatever reason. And it's very easy to feel let down and feel like nothing's working for you and just kind of give up. But at the end of the day, you're just making yourself more miserable than you would otherwise. And as I said, it's a lot easier said than done. Life, unfortunately, does throw quite a few curveballs at us, and sometimes a whole bunch of them come at the same time. And as I said, after months and months of lockdown, probably not the easiest time to remain positive or be positive, but do try to focus. Even in 2020, I guarantee you there are still glimmers of hope in everyone's life. They might be harder to see, but you can most likely find them if you take the time to look. And then focus on the things that you can control. It's incredibly fulfilling to have something, even something as simple as just get a plant or cactus, buy it for $1 or something, and just water it. That's a form of control. It sounds silly, But again, research has shown people that are, for example, that are in retirement homes, just give them something as simple as a plan to water daily. Their mental capacities will be significantly improved after a few weeks of this than for someone that's just sitting there in a chair just doing nothing all day long. So try to find things that are positive in your life. Focus on the things you can control. Be in the right mindset. Once you're there, try to find ways to again increase your income levels and your savings going hand in hand with this. Very first thing you want to do is pay off any high interest debts. There's no point in investing or saving money if you still have high income debt, by the way. So first thing, get rid of high income. Basically, take that money that you're able to generate more of, or maybe spend less of, and again pay off those high interest debts first. Second thing, establish a high interest an emergency fund, probably most likely in some form of high interest savings account. So do that. And these days, again, between about, it's recommended 3 to about 6 months worth of emergency savings. Okay, so pay off debt, set up a emergency saving fund that should cover at least 3 to 6 months of emergency savings of your monthly expenses. You're good. Then figure out what is your tolerance for risk. So this is just an example. There are many other questionnaires like this one that you can find online. So this one, let me share the link with you in chat in case you're wondering. And this is literally just to help you assess which types of investments might be right for you based on your time horizon, based on all those things. Just 11 multiple choice questionnaire. Fill this out. Again, whenever you're filling this out, make sure you're sort of in a neutral state. You don't want to be filling this out when you're depressed. You don't want to be filling this out when when you're very exuberant either. So do that. That way, you know what types of investments might be the most sense for you. And most experts recommend to invest basically 10% or more of your gross income, so your before tax income. The reason for that comes back down to this retirement calculator that we talked about earlier. If you're able to set aside 10% of your income, right? At that point in time, you should be able to retire and you manage to invest it at, again, 7% rate of return, balanced diversified portfolio, right? You should be able to retire with roughly $1 million by the time over an entire work life, right? If you're able to set aside 10%. This is where that 10% comes from that the experts typically mention, and this is why they're mentioning it. And as I said, for some people, the way to get there might be to start a business, might be to get a second job, might be to do something else. But for the vast majority of people that already have busy lives, as long as you're able to set those 10% of your income and you're earning roughly half, roughly what the average Canadian earns, so around $46,000 thereabouts. For most people in that situation, what you want to do is probably max out your tax advantageous accounts or tax advantage accounts, such as the registered ones, such as the TFSA. Ideally, max that out first. Then look at maxing out your RSP as well. The easiest way to achieve this is by having a balanced and diversified portfolio made up of ETFs. So we talked about this on many other occasions, but I'll mention it here again. The standard, again, this is what works for most people, but I don't know if it works necessarily for you. That's why you should fill out this questionnaire here on risk tolerance. Figure out what is your risk tolerance, right? So if it's 60-40, what you want, 20%, 20, right? This is the standard division here. This would be your home country, okay? So whatever country you're currently residing in this case, obviously we're talking about Canada, but if you're not in Canada, this also works anywhere else in the world, really. This would be 20% in your home country. The reason for that, regardless of how small or big your country is worldwide, how big of a worldwide footprint it has, it's the currency you're currently using on a day-to-day basis. So you want to have that sort of currency, home country bias, if you will, where you have 20% exposure to it. 20% in the US. largest economy, again, for Canada specifically, it's our largest trade partner, so it makes sense. They have a lot of innovative companies there, and 20% international. Again, these are ETFs, so you could achieve this by using 3 distinct ETFs, or some of them are sort of doing this already for you, so you might be able to achieve this with slightly fewer than that. And then between 20 to 25% of your assets in bonds, both government and corporate, just a mix of basically different subtypes of bonds, and then between 15 to 20%, depending which percentages you chose up there, of preferred shares. So you can do this either by using basically up to about 5 distinct ETFs, or if this is too complex, just go with, open an account with a robo-advisor such as Wealthsimple or many of the other ones, Nest Wealth and Quest Wealth and all those other ones that exist. Do a bit of research on that. I'll have other videos in the future talking about them. And there you go. That's really what, for most people, mind your own business, do your whatever it is that you're doing for a living, whether it's self-employed or not. And then again, those extra 10% of your income that you have, that you're able to set aside, invest that. And for most, this is probably what's going to work out the best in the long term. And as I've shown you with the math there, it works out that for most people, if you're earning at least, around $46,000 per year, which is the average income in Canada, you would basically, at that point, by saving about 10% of your income, you would retire with roughly $1 million in about 40 years' time, if you're able to save about $94 per week. Right, because $5,000, it's about $96 or so per week, basically. But even $94 is enough per week, which is $13.43 per day. For 40 years, invested at 7% rate of return, ends you with at least $1 million by retirement in 40 years' time. So again, this is not necessarily news for those of you that have attended previous sessions, but this is literally a way to become a millionaire. Yes, it's slow. If you want to speed it up, save a larger percentage, invest a larger percentage of your income. If you can't, get a secondary income stream from somewhere else. So throughout this, focus on the things that you can control. Otherwise, nothing is really going to work out. And unfortunately, all those get rich quick schemes are just that. They're schemes. And the few people that those things typically help are the people selling you the product, not the people buying the product in the vast majority of cases. So sure, this is a slower way to become a millionaire, but again, there's no reason this shouldn't work for you as well. Again, it takes a while, but it does work, and that's all you really have to do to achieve that. So I hope this helps. And as I said, do not underestimate the importance of being in the right mental space. Otherwise, none of this is going to work out, because you're going to try, but then you will likely give up very, very shortly thereafter. So being in the right mental space, by focusing on the positive, by focusing on the things that you can control, is the very first step to be able to actually follow the other steps in this. So I wish you all the best in your life going forward, and all the best trying to pursue your own journey. And well, perhaps I'll see you in a future video. So again, that's all for me today. I hope you found this useful. Have a good one, everyone.